Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at why our stock market cannot crash right now. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. And remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your most burning questions. Last week the Australian stock market at one stage was down nearly 2.5% and traded to its lowest point in 5 weeks. Now, whilst this may add fuel to those who are propagating that the market will crash, we do need to look at the bigger picture rather than what occurs on any one day or week. Now, the Australian stock market is top heavy, with 2 of the 11 sectors effectively determining the direction of our market. The financial sector accounts for just under 30% of the total market, whilst the materials sector accounts for just under 20%. Now, given this, it's not surprising to see that the market is down last week, as both of these sectors fell heavily on Thursday. Now, for the market to crash, we would need to see both sectors continue to fall considerably, which is unlikely. In 2007, the financial sector crashed 66% during the GFC, and whilst it rose up from early 2009 to a high in 2015, it has failed to rise above this high and is currently trading around 10% lower than the high in 2007. Now, the material sector also crashed over 60% in the GFC and, like financials, is currently trading below its 2007 high, but only just, as it broke above that level in May 2021, only to fall away again in the last month. So, what does this actually mean? Well, stock markets typically crash because of rampant speculation, which is an emotionally charged bull run where the masses suffer from the fear of missing out. Looking at both the materials and financial sectors, this has not occurred to date. Rampant speculation also leads to the overuse of leveraging, as those with FOMO scramble to find as much cash as they can to profit from the bull market. Economically, Australia is in a good place compared to most Western nations, and there are currently no signs of rampant speculation in the market, where we also typically have higher levels of inflation. While we are experiencing an uncertain economy and a rise in inflation, according to the RBA, this is just temporary. We are also not seeing any signs of increased uptake with leveraging, because if this was the case, the stock market would be incredibly bullish right now. What we are seeing is higher levels of borrowing in the property market, which is forcing housing prices to rise to unprecedented levels in many areas. Now, this in itself also supports the theory that the stock market will not crash, as money flowing into property cannot be invested in the stock market, causing it to become overheated. Now it's time to get into looking at the markets, and we'll start with what were the best and worst performing sectors last week. Now, the best performing sectors included communication services, and that was down 0.41%. Consumer discretion, that was down 0.56%, and industrials, that was down 0.59%. The worst performing sectors last week included materials, down 3.36%, followed by consumer staples, down 1.95%, and energy, that was down 1.90%. Now, the best performers in the ASX S&P Top 100 stocks included Alumina, up 9.27%, Washington H. Soul Pattinson, that was up 8.14%, followed by South 32, up 4.27%. Now, the worst performing stocks included Fortescue Metals, and that was down a whopping 12.37%, followed by Magellan Financial Group, down 7.68%, and Orica, well, that was down 7.22% last week. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Well, last week started out as another sort of boring week with our stock market, I think, over the last 2 or 3 weeks, really doing nothing. I think at early stages of last week, I think our market had moved up about 0.5% in the prior couple of weeks, which had been pretty normal for our market, sort of most of since last year. So we've seen a lot of times where our market has just been trading sideways in between some brief spurts of upward moves. But we did see on Thursday a big hit on our market where it was down significantly, as I said a little bit earlier in my report. But let's go and have a look at the charts to see whether this is the start of the down move that I have been expecting. So on your screen is a monthly chart on the left and a weekly chart on the right. I'm just using a slightly different charts here that I did last week, but you have seen these charts before. If you go back, I've used these quite regularly. And you can see here I've just used a trend line tool off the low back in March 2009. So that was after the GFC, and you can see here's a long-term trend. The market moved up, come back to it, 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 and then it's been sitting underneath this trend line sort of since about 2015. So that August 2015 was the time it broke below that, and since then it's only briefly touched through it there in July 2019, and then January 2020 and February 2020 it briefly touched through there. But you can see there, if I just expand that up, that's the only time it sort of closed. January it closed above it there, but since then it's just fallen right over. Now we're seeing recently it's gone through it there in August of this year. So it's not surprising for me to see a bit of bearishness coming in here, because for the last, as I said, roughly since August 2015, so 6 years, it's really struggled to get above that sort of momentum there on our marketplace. So it wouldn't surprise me if we do start to come down a little bit here into the marketplace. This line here is really long-term momentum. If I scroll right back, you can see this goes right back to 1982, and you can see our market really pops around this line through, cutting through it, coming back to it, breaking above it through here, coming back below it again. So again, when we get our next market correction, which I don't think we're not going to have right now, because obviously this was the GFC correction, this is the COVID correction that we've had that pull all right back. Right now, I don't think we're going to come back super far, because obviously that would mean to come down to about 6,200, 6,000 points if we did get a bit of a correction there. And if I scroll that out, you'll see how far that is if I just put my little pointer down. So that's roughly about 18%. I don't think our market's going to come back around about 18%. I think it's going to come back somewhere around about 8 to 10%, so somewhere around about that sort of 7,000-ish, maybe down to about 6,800 if it does come down. It could be a little bit shorter, but I think our market still is bullish. Probably through to mid-decade. I still think our market is bullish, and the next sort of crash that we'll have will probably be more like mid-decade. Now, right now, COVID is an issue. We are still seeing government stimulus, and the market's not super bullish and overheated, as I was saying a little bit earlier in my report. And if I just expand that up, you'll see currently what's been going on here now. So this low here, last week, you can see here we had a low of 7,635. So if you go back here, it's not till back here, we've got 7,664, and then that one there is 7,640. So it's right back to sort of this levels now, when we saw it came down early in Thursday's last week. So it's the lowest level we've had in quite a number of weeks, which this is auguring that we probably are moving down into a low. Now, looking at this, we've seen a move down, a move back up, and a move down. This is suggesting to me we've broken that prior low there at 7,700 points, which is what I was saying. If we break that, it is likely we're going down into that. So what I'm expecting right now is the low to sometime happen if it's somewhere between, let me give it a vertical line. I'm looking somewhere between, let me just put that there, and I'll move that to move, come on, move over. Oh, wrong one. Don't you hate it when things don't move where you want them to? Okay, I'm going to delete that. I'm expecting the low to happen somewhere, if I use my cross here, somewhere between about there, around about that last week of September, somewhere in there, so another week or two, somewhere around there to somewhere about here. So sort of that 5-week period. And if I did draw a square on it, you'd probably know what I'm talking about. But if I do a trend arrow, so I'm thinking, that's the wrong one. I'm having a good day today, aren't I, guys? Keep clicking on the wrong things. Where's my trend arrow gone again? There you are. Okay, so what I'm expecting is the market to move down somewhere into the vicinity of somewhere between that sort of area there and somewhere into sort of that area there in terms of, let me go there and I'll click that on. So to move down somewhere in that sort of space there, that sort of 3 to 4 week period there, somewhere between the last week of this month and about the third week of October. That's where the next low will probably happen. If we do that 8%, it might only be 8 to 12%, as I said. So from its high, we're already down 3.32%. So 8% will take us down to about 7,200-ish to 7,250 points. And as I said, 10% around about 7,000 points. But it could go 12%, which is about 7,000 points, but nothing to be too worried about at this point in time in the marketplace. And what you need to be understanding is, like I was saying a little bit earlier in the report, is the materials in the financial sector, the big chunk of our marketplace. Obviously, BHP, Rio, Fortescue, your banks, all your banks, those sorts of stocks are very heavily weighted on our market, and if they're moving down, they pull the market with it. But that doesn't mean stocks won't go up in that time. It just means that when you see the big end of town or they're moving back, you just expect that the All Ordinaries Index is down, but you may find that your stocks don't go down. That's why I constantly say to people, just because the market's going up or down doesn't mean you need to buy or sell. It's not indicating what your stocks or the stocks that you hold will actually do. You just need to take the signals on those stocks themselves, not on what the market's doing. So now's not the time to panic at all. Now's the time just to expect that if you have some of those top 20 stocks, they may be moving down, and you just need to put a line in the sand to say, do I want to continue to hold or not? I think after we get our low in the next, as I said, the next 6 weeks, after we get our low, the market will go bullish, and we'll be bullish into 2022. I think we're still going to be fine. I think our market's going to be more bullish, more medium-term bullish, right through to sort of 2023, 2024, possibly before we get into our next sort of period where we might crash again, which could be somewhere between 24 to 26, 2024 to 2026. But right now, that's a little bit too far out for most people to see. But with the government spending and what's going on in the economy right now, I can't see a crash happening. It's just not going to happen. So now's the time to get into your questions for me. So let's get into that now. Alrighty, the first question we have today is from Will, who says, "Hey Dale, pump and dump is illegal under ASIC's market integrity legislation, right?" Yeah, you're correct. They did come out, I think I mentioned in last week's report, they came out with a thing on their website saying that a lot of social influencers, they're talking about Facebook, they're talking about TikTok, they're talking about YouTube and other different platforms where you have people who are completely unqualified to talk about financial instruments or financial assets or recommend product, are either recommending product, like for example, somebody saying buy BHP today, that's recommending a product, or they might be promoting a product from which is a financial instrument such as an ETF, or they might be promoting a managed investment, whether it's a managed fund or something like that. So they could be anything promoting. Property is a little bit different. Property is not considered a financial asset. Interesting, hey? It's the most expensive thing you buy in your whole life, but residential real estate is not covered under ASIC. That might surprise people. But anyway, Will goes on to say, are the people who are participating in these schemes, as in organising or simply following, breaking the law and at risk of punishment? Those who are initiating it, yes. Those who are following it, no. So if you are watching a YouTube video and somebody says buy BHP and you buy a BHP, you aren't breaking the rules. They are. That's the point. And it's more ASIC. Up until now, ASIC's really been a lot more focused on the industry. So we're talking about the big industry. So pump and dump in the industry. And it could be, let's say, you are a big broker and you might have, 10 million shares of $1 stock in there. So what you might actually want to do is essentially start selling that out to push them down to 80 cents or 90 cents and then buy them back again. So they do that all the time. But you might have $1 stock and you think, I want everybody to buy this stock because I've got 5 million of these or 10 million of these dollar stocks. I want it to go to $1.50. So you go out there and push out information and trying to ramp it up. So there's nothing. In theory, anybody can set up a Gmail account. Everybody can, log into these chat forums and subscribe to the chat forums and become members of chat forums, that sort of stuff. And then under a different sort of name, there could be a lot of them. And then they can start talking about this dollar stock and how good it is, etc., etc., etc. They might even pay people. That's the sort of stuff that ASIC looks at. And if influencers being paid to promote a product or promote a stock, they're looking at that. So the influencer will be in trouble, and also the person paying them will be in trouble. So that's what ASIC is also looking at. Will goes on to say there seems to be an overwhelming disregard for the idea that this could be illegal. Absolutely 100% agree with you, and I really struggle with people sitting in their lounge rooms in t-shirts and baseball caps telling people about investing and creating wealth and giving advice. And I find that's really, really challenging because myself, as a responsible manager for our own AFSL license, our own ASIC license, and have been we've had our own ASIC license since about 2003, I think. And we pay thousands and thousands and thousands of dollars a year to be compliant and have ASIC looking over our shoulders, making sure we're looking after people, making sure we're being honest and ethical and handling everything that we do properly. It's a real unfair advantage when somebody can sit in their lounge room with a little webcam and tell people to buy and sell product that they're not licensed to do so. How is that fair for us who are doing it the right way, and that anybody without any skills can be giving financial advice? And worse, people sit there and take it as if that person on the camera actually knows what they're talking about. And I know for a fact, and this is, I haven't even finished Will's email yet, I know for a fact I've been to seminars and watched people on stage where the person on stage acted as an expert, talked about a product, and have never ever traded at all in their life and have no license and skills. And I've actually walked up to the actual organisers of the event and I said, that person doesn't know what they're talking about. They've just read something, understood it, and just stood on stage and talked about it. And when I kept pushing them, they said they agreed with me that that person had never traded in the product that they talked about, didn't understand that product, they just read a document. I know people that have read a few books that get out there and talk about investing and investing techniques as if they're experts and have never invested and traded. That's what I get. And that's why I'm saying there's a lot. You don't know who you're watching and who's on those chat forums because you don't know the names on the chat forums. You don't know the names of those people on the YouTube videos. So be careful where you get your information from. So anyway, he goes on, this could be illegal, and many people participating seem completely ignorant of the idea that they might be doing something wrong. 100% correct. I know most people that put out YouTube videos, TikToks, and put stuff on chat forums are really ignorant of the fact that they're giving financial advice because it's probably not in their space to do that. So in their defense, you know, if you're somebody who likes to get on chat forums and talk about stocks, you're probably not thinking too much about ASIC. You really aren't. You're just having a chat with people that are possibly like-minded people to you, you know, that, you know, they understand and they like stocks and they like talking about stocks. So people don't necessarily think about that. But when you get somebody who's making a video about it or actually trying to do the pump and dump, that's super illegal, and you do need to be careful. So to me, the ASIC warning is anybody who's doing YouTube videos out there and they are bringing up stock charts and they're talking about stocks and they're talking about the best dividend stocks you should own right now, or the best stocks you should buy today, or the best stocks you should be buying this month, or the best stocks this year, all of that sort of stuff. They're the ones that should be very, very worried about ASIC right now, because if ASIC knocks on your door, it's going to be exceedingly costly for you to do that if you're not fully licensed to be able to give the advice. And ASIC, you can't really argue with them. They're a bit too big and a bit too voracious to argue with. So please be careful if you're thinking about doing that sort of stuff. In any social media, you do need to protect yourself. And ASIC doesn't take, just because you put a disclaimer at the front, they're not going to take that. They just say, oh, I'm just not giving financial advice, I'm just telling you what I think. Or, you know, you need to find your own advice. ASIC won't even look at that. They'll come in and give you big fines. And they could end up in jail depending on the severity of the breaches that you may have committed. So please be careful if you're thinking about that. But thank you very much for the question, Will. Next, we got a question from Hans who says, Dale, how do you feel about Lark Distilling? Lark Tasmania, I have bought in this stock because I've read several comments to say to buy this stock as a strong buy. Thank you. Now, let's go and look at Lark on the screen. Obviously, strong buy means you've been looking at it from broking houses, and I would suggest they've been saying it's a strong buy simply because it's basically hit a peak. And looking at this stock on a monthly basis, have a look at it. That's super liquid through there. I'm not sure why, but look at that. That's the terrible stock through here. You've seen this massive, massive move, and currently to say this is a strong buy would be something pretty silly. in my book. You can see they're 277%. So anybody recommending this as a strong buy through here would actually be, as I said, pretty silly to be doing that. That's not a strong buy in my book. This would be a strong, this would be careful right now, because we're talking about that. This is just this year, it's risen up 276%. So right now I'd be suggesting it's probably going to do the opposite. Because if brokers are saying it's a strong buy, you're going to bet it's probably going to do exactly the opposite. The brokers are really good at doing stuff like telling people to buy when they're actually selling. And you're thinking, that should be illegal too. But it happens all of the time. Right now, look at this big sort of topping pattern here, looking a lot of distribution right across through here. So this could have been people in the know getting out while all these strong buy recommendations were happening. And obviously last week it's come down here. So right now this doesn't look as good. I would suggest it's probably going to come back somewhere down into this sort of $3 to $3.80 sort of area over the next coming sorts of weeks. So I wouldn't have my money in this stock right now. If you are in it, just set a stop loss, mate. That's all you can do. Set a stop loss on your buy price. But I'm not sure whether I've said it in this forum before, or on these videos before, but before long before internet trading and everything else, yes, I'm that old, before all that sort of stuff, brokers used to send out these big documents to their clients. And I remember every year getting these big glossy documents from brokers about what stocks we should be buying and what we should be selling. And you'd get these ones every year. Near the end of the year, what was going to be bullish, what they were recommending to buy in the next year. And I did the research a few times, and I'm pretty sure I mentioned it in my book. But I did the research and I made spreadsheets out of this, because I had a computer at the time, but I did spreadsheets out of it where I put all the stocks they said to buy in one spreadsheet and all the stocks they said to sell put in the other spreadsheet, and the sell portfolio dramatically outperformed the buy portfolio every single time I did it. So that tells you a little bit about a lot of analyst recommendations. Now, I did talk about that last week too, about analyst recommendations and not to trust analysts. And yes, that's coming from an analyst. Always do your own research. Always know why you're buying. And if something's a strong buy, really have a look at it and determine whether it really is a strong buy, or whether it's somebody just trying to sell you something that they don't want anymore. They're trying to get you to buy so they can sell out of it. So just be careful about that. Let's get into the next question. This one's from Chris, and it says, if the market is in a general downtrend, the share price dictate an exit, and I cannot identify any stocks that look good to buy. What options do you have to invest in the short term? Simply, that will never, ever happen. If you understand what you're doing, even in the bearish markets, every single stock sold is somebody buying it. So even in a crash, somebody's buying stock. So every single stock sold is bought by somebody. Even in the 87 crash, the 2007 GFC, the coronavirus crash, somebody was buying all the stocks being sold. So that's always happening. But in a bear market, you'll find probably anywhere between 30 and 40% of stocks will be going up in the market, and maybe 50 to 60%. Remember what I was saying a little bit earlier. Financials and materials are basically half of the All Ordinaries index. So if those two sectors are coming down, that still leaves half of the All Ordinaries index. And we're talking about, and most of those sectors, the financials and the material sectors, are driven by just a few stocks, like your BHPs, your Rios, your big four banks, etc. So there are few stocks. So if you're looking at the top 20 stocks, they pretty much either push the market up or down. If those stocks are pulling the market down and you've got stocks and you've exited, there'll be money to go into other stocks. It could be mid-cap 50s or small caps that you could be buying that could be going up. And I remember there was a long bear market back into sort of 2003. And when I did the research, I found out of the top 200 stocks, there was at least 60 stocks that I could have bought and made money on in that same period of time, quite in the top 200 stocks. So there's always something for you to buy. You just need to have the skills to know how to find them, and obviously know how to buy and how to manage the portfolio and how to sell it. But if you can't find stocks to buy, that means your skills aren't good enough at this point in time, and it's a real big signpost to say get better skills. There's always something to profit on in the stock market. The next question we got is from Alex, who says, hey Dale, was hoping you could look at a CDA, as I've been considering buying for the long term, and it seems to be a solid, steady, growing company with diversified products and clients. Would love to have your opinion on this. Thanks for your consistently great, informative, free content. My pleasure. So let's go and have a look at, I forget what the name of it is. It's Codan or Codan. Let's go and have a look at it, bring it up, Coden, that's it. So looking at this right now, I wouldn't be buying this stock right now. It looks quite bearish to me, and I'll bring up the monthly chart just briefly and so you can have a bit of a look at it. You can see how it really ran hard for quite a while, right up into this high back there in May this year, but it has fallen quite considerably since then. So if I put that down, it's currently down 28%. I think it's probably going to fall a little bit further down to that sort of $10, $11 mark at the moment. If I use my trend line sort of tool and just show you a bit of the momentum, you can see here, if I just draw those there, it's now going below that line, that momentum it sort of had since that March 2020 low. But if you go right back here, you can see how steep it is after going sideways. It really pulled off and going steep, and that's what I was saying I think last week, where I said the steeper it goes, the bigger the falls are going to be on the other end. You really do want stocks that are a little bit more consistent, not just going for spectacular growth. So right now this stock would be on my not so sexy list at this point in time, and you shouldn't be having your money into the market. You're looking at this, there's numerous weeks down there. I wouldn't be surprised if we see 1 or 2 weeks up sometime soon, but don't get caught in that, because as markets move up, they come down, they 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 go down, they move up, they go down, they move up, they go down, they move up. So right now, any movement up, I think, would be short term. I do sort of think between that $10 and $12 it'll still go down into that. Just wait for it to hit its low before you get into the stock. And that's really what I constantly say. Don't try and buy something because you think it's cheap. Wait till it stops falling and starts to rise before you do buy it. But thank you for bringing up Coden. It's a nice looking stock normally, and when it does hit its bottom, it could be a really, really nice buy, but it's just a little bit too early right now. Now we have a question from George, who says, hi Dale and team, what do you think about Paladin short, medium and long term? George, if you're asking me short, medium, long term, then you're asking the wrong question, because I can guarantee you're not trading short, medium and long term. And so it's the quality of the answers people get are really dependent on the quality of the question. You're either trading short term, you're either trading long term, or you're trading medium term. You're not doing all three on the same stock, so it's completely irrelevant. And what I would say and what I would do, if I might say, look, long term it looks really, really bullish, and you might start trading it short term, but I think short term it's really bearish. So I'm not going to give you all three, because it's just not the right question to ask, mate. You really do need to have a solid idea of your portfolio and what you want for that portfolio. If you said to me, I'm looking long term on Paladin, how is it okay for my long term buy that I'm looking for, then I can answer that question quite well. But if you say short term, I could answer that quite well, but not when you're mixing all your time frames. It's really not smart to do that anyway. I'm not having a go at you, I'm just saying it's not smart. You need to have a good idea what you're thinking with your portfolio. But let's go and have a look at Paladin on the screen in the charts. Bring up Paladin at the moment. It has been a little bit bullish more lately. Let's bring up the market on this stock on the weekly chart, monthly chart, sorry. And you can look at this. It just has this massive sideways moves, which is done just through here between 2014. It almost went off the charts. If you're looking at this low right through here, you're talking about, here it is at 4 cents back in 2017, and you can see here why people are interested in it right now. It's taken off since March last year. Obviously the part of the rare earths and everything else that it's been into. Massive move so far this month. That's possibly why you're looking at it at this point in time. We've seen the move from there in August. It's up 67%. As they say, the party could be over on this stock right now, and you probably may have missed the move on there. But looking at here, on Paladin, if we're looking at this point here, there's a lot of indecision so far this month. This last week, a bit of an indecisive week. It gapped right up through here. I'm going to put some volume on it. Look at the massive volumes through here the last 2 weeks, because it did take off really, really strongly through there. And this is what you see. You see and no offense to anybody, but you see the amateurs jump in at the end, and you get these big volumes coming through, 81%. That's probably gone overheated at this point in time for it to go 81%. So I would expect it's probably going to start to fall away and come back again. So right now it's sitting at around 80 cents, but it really wouldn't surprise me if it came back into that sort of 70 to 60% range. I wouldn't be putting my money, if I'm not already in Paladin right now, there's no way I'll be adding money to it right now. Long term, it could be good, but you can see this is not a long term buy and hold stock. It's just not. It's one of those stocks. It's anything in sort of that sort of mining sector is more cyclical, and what happens is when the price of the commodity that they're in goes up, they go up. When the price of the commodity they're in goes down, they go down. They're not necessarily growth stocks like a bank is a growth stock where you constantly see over decades higher stock prices. When you're looking at material side of stocks where they are in mining, they are much more cyclical. They might trade between 10 cents and $1, or $1 and $2, or $2 and $3, and then they'll go up and back. And we've seen two ranges on that chart where that stock did all that. So right now it's moving up and it has moved up. Doesn't mean you need to get into it. So right, as I'm saying, I think you probably missed the boat if you're not already in it. But thank you very much for asking the question. And thanks to everybody for sending in their questions this week. But if you are sitting there and you'd like me to answer a question for you, first, publicly subscribe to the channel. And then just stick your question below in the comment section. I always go to the publicly subscribed people for this channel, answer their questions first, and then the other subscribers, I answer those, and I can't answer every single question every single week. So if you want to guarantee your question's going to get answered, make sure you're publicly subscribed to the channel. We also remember that here on this channel we do these Monday market reports each and every week on a Monday, and we also do our live stream every Tuesday night, 7 to 8 p.m. That's where you can ask the questions of Janine and myself. You can also phone us in live. We've got a live phoning system now, so you can ring 92909988. That's Melbourne, 92909988. So write that down. Call us tomorrow night and say g'day and ask us a question. Remember to hit that subscribe button now. Click the bell on the right of it so you know when we upload our videos. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.